India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to Bazaar Morning Call. We have plenty to celebrate. The Bulls managing to conquer the 24,000 mark on the street. India managing to conquer Australia in Perth. And with me, I have slightly not so new, maybe not so new faces in the studio today. I'm Surabhi Upadhyay, Manglam Malu on my right and Rima Tendulkar on my left. Good morning, guys.
Hi, good morning. You know, as we celebrate what you spoke about, here's a grim reminder that today is 26/11. It's 16 years since the horrific attacks that shook Mumbai and the nation. A lot of people lost their lives. The city was, in shambles. So
we remember them.
We will always remember them.
We salute the brave hearts. And of course, we remember what the city endured.
We take that, on board, and also know that every time there is such a grim thing that happens, we all bounce back as a nation, as people as well. And that's what, will happen in the markets as well, bounce back. The important part that Surabhi said, yesterday we conquered the 24,000 mark on the Nifty. India went ahead and conquered the Waka. The question is, there is still some business left. For the Nifty, we're still way off all-time highs. And for the series as well, there are still 4 games to go. And three of them, we need to win to qualify for the World Test Championship. So steps in the right direction. Where this goes is what we need to track.
Well, typically what you do is after your first win, you take a bit of a pause, you take a bit of a breath, and maybe that's what our market will want to do today. So let's kickstart with the cues. The cues are not bad, but they're not overwhelmingly sort of positive as well. Let's start with Wall Street first up. And there we had, more of the same. Equity markets continue to rally, and once again, it was the Dow outpacing the Nasdaq on Wall Street. Again, the Nasdaq was up about 0.3, 0.4%. The Dow put on another 1%, and that's what's been happening in the U.S. Domestic economy-facing stocks, domestic consumption stocks, they've been doing better, which is why the Dow is catching more of the investors' fancy than the tech-heavy Nasdaq of late. But what are we dealing with this morning? We are dealing with social media posts coming in from the U.S. President-elect Donald Trump. Now, he's speaking about tariffs already, and he's saying that the day he takes office, the inauguration day, 20th of January, he will impose additional 10% tariffs on all goods coming from China. And now he's talking about 25% tariffs on everything that's coming in from Mexico and from Canada. So a lot of this rhetoric / perhaps possible reality tariff talk will continue in the weeks ahead. The market knows that. So it's trying to take it in its stride. If you see the Asian market reaction, when the Chinese markets opened up, they were originally negative, but now they've turned positive. Though some of the other regional markets are still down. Japan, for instance, is still down. But Asia is kind of looking at a lot of this tariff talk and taking time to let it sink in. What's good, however, is the cool-off in the bond yields. That's been pretty dramatic. And this is because of Scott Bessent's announcement as Treasury Secretary. He is someone who is seen as, a bit of a rationalist, someone who believes in fiscal prudence. And that's why the bond market has been celebrating the fact that he will take charge at the Treasury. The yields have cooled off pretty dramatically in the last couple of, days. I mean, from Friday to where we are today, 4.3 on the US 10-year, so that's not bad. Even the dollar cooled off, finally took a bit of a breather after that mega move up to 108. But this morning, if you look at the dollar index, it's around 107.3. So it's not like there's a major fall in the dollar, because in general, dollar strength is something that even Bessent is in favor of. So let's see how this plays out. But for the time being, bit of a pause in the dollar as well. The good headlines from crude. Rima is going to talk about that because there's been a cool-off. There is hope that finally, after well over a year, there'll be a ceasefire between Israel and Hamas. So let's see. Just to talk about the positioning over here. Now, the Nifty has had a dramatic recovery, a fantastic recovery from the lows. 23,250 thereabouts. That's the lowest point we've hit in this correction. And over Friday and on Monday, there's a 1,000-point recovery that comes through, which is why I'm saying that maybe today could be a day of slight pause, maybe starting a little cautiously and optimistically. And let's see if the bulls can build on that, because the critical question for this market is the worst of the FBI selling onslaught over? We'll get to the numbers in just a bit. But remember, yesterday's action was also including the MSCI rebalancing. So that kind of plays in. We'll talk about this as we go forward, but the bulls will really hope that from here onwards, at least the FPIs can be a little, they can show some relief and respite, and the bulls can keep building on these steps. We've already conquered the 20 DMA. Let's see.
Indeed. So the FIs were buyers in the cash market after 38 sessions of selling. Yeah. Of course, aided by the MSCI rebalancing. Then you've got that crude price decline of 3%, Dow closing at a record high level. But the GIFT Nifty, I think, is on the flatter side. Once again, putting the Asian picture on board. So you've got China and Hang Seng in the green. So those markets are rebounding. And the general perception is that the new appointment to the U.S. Treasury Secretary could be seen as, positive for China because he promotes measured tariffs and he's open to negotiations with China. So which is why you've got Hang Seng in China up in the green, but the rest of the Asian markets, so Nikkei has got a cut of more than 1%. Taiwan, Korean markets too under pressure. But really, it's, the fact that Trump is following up on his election rhetoric about trade tariffs, that follow-up, that he's not going to, ease up on it. And I think that is the big breaking story about the, the additional tariffs. The first executive order coming in from Donald Trump on the 20th of January is going to be the 25% tariffs on on Mexico and Canada, which are US's one of the largest economic partners, and then plus additional 10% on China. This is largely because he wants to control the illicit drug, which is coming into US from all these nations. But that's the big breaking story that's coming through. We'll discuss that in greater detail. For Japan in particular, in other global news, the services PPI has risen in the month of October by 2.9%, ahead of street expectation. Crude prices are down 3% overnight and now below the $73 per barrel handle on Brent. Putting the flows picture on board, the DII's net sold 6,900 crore. The FIs bought nearly 9,950, but again skewed by the MSCI picture, and QIPs are continuing.
You made the point on controlling illicit drugs coming into the country. Illicit drugs rarely come tariff and tax paid, but then, let's see. This is going to be an interesting space to watch in the weeks ahead.
It will be, but this week itself, we have the Nifty November series expiry playing out as well. Over the last two trading sessions itself, we've seen nearly 900 points on the Nifty. So the question is, where do we go from here? So just looking at a bunch of triggers that led the market to move the way it did in yesterday's trading session itself. So yesterday's move on the Nifty was actually led by three major things. We had, the Maharashtra election verdict that came by. Then you had the MSCI inflows. And then you had the short covering that took place in FNO itself. So if you just take a look at the Maharashtra election verdict for the first half of trade, the high on the Nifty was made at around that 24,351 mark. Thereafter, we saw some bit of selling. But at the lower levels, those two other factors like the FII buying and FII short covering came by in picture. We've been talking about how the FIIs have been, the first time cash buyers in the last 38 sessions led by MSCI inflows. But remember, if you just take a look at the last time the FIIs bought in the cash market, X of any of this was way back in September 2024 itself, September 26th, 2024. So on a month, a date-to-date basis, it's actually nearly 2 months since the first time the FIIs bought in our cash market. The second part that played out, yesterday's delivery-based buying that we saw in a lot of these index heavyweights. HDFC Bank hit a record high. Reliance did extremely well for the last couple of trading sessions. It's been doing well. ICICI Bank and Infosys as well. All of them saw some delivery-based action. Importantly, the FII short covering continues for the second trade session. So yesterday we have FIIs buying around 3,400 crores in the cash market, covering 24,000 shorts. And if you look at the FII positioning over the last few trading sessions, you would notice that the net exposure is coming down from what? Minus 2.18 lakh to minus 1 lakh. So in just the last 5 sessions, 1 lakh short contracts have been covered, and shorts, which was 75% of the system just about 2 days ago or 2 sessions ago, have now come down to 63% itself. More of that is something we'll be tracking. 24,300, that remains a bit of a fulcrum for the next couple of days because 24,300 call and put are both equally active. Those who are writing both the call and the put are playing for a broad range on the Nifty for expiry between 24,000 and 24,600. And that's where a lot of the technical levels on the Nifty are placed as well. The 20-day moving average is strong support. On the way up, we have the 50 and the 100-day moving averages. We'll be watching out for a bunch of stocks which have come out of FNO ban, namely Adani Enterprises, Nalco. We have a couple of others as well. But 2 sectors I'll be watching out for in particular. One will be the mid-cap, because when the frontline indices consolidate at high levels, the mid-caps typically outperform. And second one will be the FMCG stocks. Why do I say that? Because now the success of populist measures is something that everyone's seeing electorally. that means that, there will be more money in the hands of people. Will they spend it on staples or not is something we'll track. And secondly, overnight, we did see oil prices come down as well. So all these factors doing well for the FMCG sector.
And the FMCG giant HUL will be in focus on the demerger news of the ice cream business. But let's get back to the global markets in the picture. Robert Sorkin, global economist at Citi, is now joining us on the show. Robert, thank you very much for joining in. This is Rima here. So 2 big announcements that we're tracking here. One is Scott Bessent's appointment as the US Treasury Secretary. And 2, Trump posting on the Truth Social platform pledging tariffs on China, Mexico and Canada. Weigh in on what these 2 mean for the global markets.
Absolutely. And thank you both all so much for having me. I think on both parts, I'll start with the first one, which, markets have been very excited about because Bessent is seen talking about more fiscal control. So bringing the deficits, which are forecast to be 6% of GDP over the next decade, down to something like 3% over the next several years, targeting 3% U.S. growth, also larger oil supply, and markets have taken that very positively. I think it's a very good choice and also is going to be a very good voice within the administration on economic policy. But it's important to also note that while the Treasury is the most senior economic official, there are many other voices that are going to be at the table, including Trump himself. And there's going to be a very complex process of debating what type of policies. What markets are really trying to figure out is what tariffs are eventually going to look like. And there are different voices within Trump's inner circle that feel more or less strongly about the type of tariffs and how extensive of tariffs he should do. So it's, I think, a very good choice. I think positive, but only going to be one voice of many. And we have to see how the rest of the economic choices evolve in terms of staffing. On the second one with the tweet, I think to me it was a bit of a surprise. I fully expected and have been expecting that Trump would aim to negotiate with trading partners and use tariffs more as a negotiation tool. Even with China, I think there is scope to negotiate. Now, we've seen there's a big difference between the rhetoric that Trump says and what ultimately ends up being pursued as policy. We saw that in his first term. So I'm still not convinced from this messaging that we are necessarily going to get tariffs on day one. It may very well be a negotiation tool that he'll use to kind of spark debate with trading partners as he heads into office. So it's a worrying announcement, but I think it's too soon to say if it's actually going to end up being what we see when Trump enters office on day one.
Robert, hi, great to have you on the show, and that makes perfect sense, right? Because with the new administration coming, we really need to figure out who finally does what. I mean, markets are moving on expectations, but whether it's the Treasury Secretary, whether he manages to prevail or not, and whether Mr. Donald Trump indeed goes ahead with severe tariff hikes, we'll need to see. But in the meantime, the equity markets have been having a fantastic run, right? The belief is that it's all about making America great again. And we're seeing that play out. A lot of the more economy and consumer-facing, local-facing stocks, they've started doing really well. Do you think Wall Street will continue moving higher towards the end of the year? And where does that leave emerging markets? Because from markets like India, I mean, there's been an exodus as money moves back home.
Yeah, it's a complex picture. And to your point, equities have been performing very well in the U.S. Part of that, as you said, is because we seem to be having a very strong, resilient economic cycle here, including a very strong, resilient U.S. consumer that just keeps on spending. And we've seen a broadening out of that spending. It used to be that consumers in the U.S. were just increasing their spending on services. We're starting to see that broaden out into goods as well. And our equity strategists really like growth in cyclicals in this environment. Now, our equity strategist is looking for a bit of a pullback from current levels, but that's not baked in the cards. Their bull case for the end of this year is 6,100. So you still could have some more room to run, depending on how the economic picture evolves, and of course, how the policy picture ultimately evolves. If we end up getting extensive tariffs, in the past, that has been a headwind for many companies and their equity prices. So it's really a complex picture of how well the U.S. economy holds up and how well the policy landscape evolves. But I do think there is scope for it to go up from here, as I mentioned, with our equity strategist bull case. Now, for India, it's a complex picture, as you said, but at the same time, I do think over the medium term, India is very well positioned, especially compared to other emerging markets. We've had very strong growth this year, and we're forecasting another very solid performance out of India's economy next year. So I think while there's been some challenges, I think India's economy is very well positioned over the medium term, and over that period, it should attract increased investor flows.
Take that point, Robert. Thank you so much for joining in. We're back to the days where, we're watching Twitter before ticker once again as Donald Trump, takes charge once again. We'll keep an eye out on all the complexities of tariffs and the impact on U.S. stock markets. But the good part is that India, the outlook for the near term is fairly solid, though how much of that is in the price is something that we'll have to, keep an eye out on over the next couple of years. Thank you so much for joining in. With that, let's move on and tell you what corporate interactions we've lined up on the show for you today. At 8:35, we have Karthik Narayanan of Team Lee Services joining in to talk about the employment outlook report. At 9 a.m., we'll be joined by Karan Torani of Elara Capital as Zomato's 8,500 crore rupee QIP has been launched. At 9:20 a.m., we have Ashwini Agarwal of Demeter Advisors, who will be our market master for the day. At 9:30, we have the management of Shriram Finance, a big mover in yesterday's trading session. They will discuss their second half FY25 outlook with us, followed by B. Bhaskar Rao of Kim's Hospital, who will be talking with us at 9:40 to talk about their outlook for the second half in terms of occupancies and average revenues per bed. And a little later, at 9:50, we have Krishnamurthy Subramaniam of Afcons Infrastructure joining in to discuss infra projects, if they will see any pickup post Maharashtra elections. Towards the end of the show, in our special segment, It's the Economy, Lata will be conversing with a host of experts to discuss if the return of a government leads to a strong majority capex increase in Maharashtra.
Time for a quick break on that note, but on the other side, we have lots of stock-specific action to track today in our special Top 10 segment. We're looking at HUL, telecom companies, Interglobe Aviation, BHEL, Hitachi Energy, Power Grid, Premier Energies, all in the green. So positive news flow for these stocks, and perhaps in the red could be Zomato, GE Vernova, KEI Industries.
Welcome back. So cues are mixed across Asia. Let's get the implied open up on the screen as well. We've got some of the markets like Nikkei that are under pressure, but some of the others are not that bad. And we are quite flat with a slight positive bias. So let's see if this is how indeed it plays out. Let's talk about stocks, and there are plenty to track this morning as well. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Mangalam told us that FMCG is definitely going to be on the radar this morning for lots of very sensible reasons. So let's start off with the FMCG big boy. No ice creams for Lever, Mangalam.
No ice creams for Lever? Not necessarily. It is a fair amount of ice creams for shareholders of Lever separately. So all those Magnums and Quality Walls ice creams that you enjoy, you will continue to enjoy it. Instead of it being housed in Hindustan Unilever itself, now it will be listed separately. So, this has been something that has been going on for a very long time. After the end of the second quarter as well, the management said all options are on the table, and now we know which option is the one that they went for. Scheme of demerger will now be placed in front of the board and shareholders early next year. Shareholders will get shares in the ice cream business in proportion to the holdings in HUL itself. So no problems with regards to the shareholding pattern as well. Ice cream business accounted for nearly 2% of their sales and has mid to high single-digit profit margins. Now, in Unilever's scheme of things, 2% of their sales is not as much, but 2% of Unilever's sales also is a fair amount. So, basis the current contribution and growth, the ice cream business could anywhere be between 50 to 60 rupees per share of a Unilever share. Again, not much in terms of Unilever's overall scheme of things, but separately listed Unilever ice cream business could well command a market cap of over 12 to 14,000 crores. Which
it's not in particular sold right now.
It's not sold. It's just separately listed. So yes, ice cream is not going out of Unilever physically, but yes, on the stock exchanges, yes, they are.
Okay, all right. So that's HUL making headlines this morning. Let's get to Zomato as well. Zomato is looking at fundraising. We have Nimesh with all the cues. Nimesh, and you were alerting us about this, many weeks back as well. And now finally, the fundraising is on.
Well, absolutely. So finally, they've launched the $1 billion QIP book. The indicative price is 252.62, a nearly 7.5% discount to yesterday's closing price. But do remember, yesterday the stock rallied on the back of the sensex inclusion. Now, the key important point for this $1 billion fundraising is that after this fundraising, the target is that the FI holding will fall below 50%, and then Zomato is likely to request the regulators to cap the FI limit at 49%. This will be very important as far as Blinkit is concerned. So maybe on a pricing front, because of price at a discount, you might see a bit of red on the stock, but it looks like it will recover if there is a very strong demand in the QIP of Zomato.
Given the sort of move that we've seen in Zomato already, there will be a fair amount of demand for this, Nimesh. Very interesting news piece out there, but you're also tracking KEI Industries and GE Vernova.
Yes, so as far as KEI is concerned, it was part of my chatter yesterday as well that the QIP book is likely to launch very soon. They've launched last evening, so KEI is raising close to 2,000 crores, $237 million by QIP. The floor price there is 3,800 rupees per share, which is equivalent to close to 5.5% discount to yesterday's closing price. The equity dilution will be close to 5.8%. It was in the works, now it's finally launched. So the company is raising close to 2,000 crores by QIP. So given the discount, might be the stock will react a bit red in the opening trade. And as far as G&T is concerned, again, it was part of my chatter list a few days back. There was an indication that there will be a large block. It is now happening via an OFS. So the promoter entity is selling another 8.3% stake via OFS. The institutional book will open today, and for retail it will open tomorrow. The indicative price there is close to 1550, a meaningful discount to current price of 1900. So the book will get built by the retail investors today, as would happen with other OFSs as well. The interesting part is after this particular stake sale, the promoter holding will come to close to 51%. So further supply is unlikely, but there is a large OFS of 8.3% in GTNT today.
Wow, look at the amount of paper supply hitting the market. There's Zomato, KEI, GETND, NTPC Renewables just closed. Incredible. And all of it being lapped up by the street. Thank you for that, Nimesh. Let's get to Ashmit. The reason we're dialing him this early in the morning is that there could be some good news coming in for telecom companies with respect to some relief on bank guarantees that they're supposed to submit on Spectrum. Ashmit, morning. Good to have you on the show. What are you picking up?
Well, a big relief coming in for the telecom companies, undoubtedly. Every time they buy spectrum, or they had been buying spectrum prior to 2022, they were required to submit bank guarantees along with that, which resulted in a liquidity crunch, especially as far as companies are concerned, especially in recent times. Now, to account for that, in 2021, the government had decided that prospectively for all subsequent auctions, there will be no BG or bank guarantee requirement. So 2022, no bank guarantees given. 2024 auctions, again, no bank guarantees given, which gave rise to the question that why give bank guarantees at all, even for spectrum that was acquired pre-2022, and that was a demand that had been put forth. The DOT certainly saw merit in this demand, had formulated a cabinet note, had placed it before the cabinet for approval. Last evening, we understand the cabinet has granted its nod, and this nod is applicable across the sector. This will be a sector-wide relief that bank guarantees will be waived for spectrum that was acquired pre-2022. In terms of what the implications are, it comes as a huge relief for Vodafone Idea. Looking at the position that they are in, looking at the position of the financial crunch, the liquidity crunch that they're looking at, this will come as a huge breather for them. The money that was locked in for bank guarantees for spectrum that they had acquired pre-2022 is likely to now get freed up. This is also something that the likes of Bharti Airtel had been pitching for and will certainly benefit them as well. So clearly, a big relief coming in with the government approving that bank guarantee waiver.
Okay, thank you very much for that. Big relief coming in for the likes of Vodafone Idea. Vamakshi is now with us for the latest on the October passenger air traffic and what the numbers show, and even on BHEL Hitachi Energy. Vamakshi.
Well, good morning, Rima. Let me first start off with Indigo. The stock will be in focus because in the month of October, India's domestic air passenger traffic grew to 1.36 crores as compared to 1.26 crores that we saw in the same month last year. This is an uptick of 5.3%. And out of that, Indigo catered to nearly 86.4 lakh passengers. And with that, its market share stood at 63.3%. Now, I'm going with the green for this counter because the market share for the company seems to have improved from 63% that we saw in September to 63.3%. But apart from that, BHEL and Hitachi Energy, both of these counters are expected to see a very strong trading session, and that is because a consortium of both of these companies has received an order from Power Grid. Now, this order is to design and execute 800 kV, 6,000 megawatt and 1,200 kilometers of HVDC terminal stations, which will be transmitting renewable energy from Khavda in Gujarat to Nagpur in Maharashtra. Now, this project is expected to be executed by 2029. Now, going with the green for both of these counters because generally HVDC projects are expected to be huge in terms of the contract value, and therefore bodes well for both of these companies.
All right, we take that point. Vamakshi, thanks a lot for that. Let's go across to Vivek as well. He's watching a couple of stocks. Vivek, what do you have on your list?
Well, good morning. Two stocks on the radar. First one is Power Grid. Now the company has emerged as a successful bidder under the tariff-based competitive bidding process to establish an interstate transmission system. This is for a power evacuation project in Rajasthan. This particular project will be done via the BOOT, which is the Build, Own, Operate and Transfer basis. The second stock on the radar is Premier Energies. Again, the company has received multiple orders and the total worth of these orders is over 1,080 crore. The order has been received from two independent power producers as well as one other customer that the company has not specified. So in this particular order win, when you're talking about the breakup, solar modules is at 964 crore, solar cells at 123 crore. Remember, at the end of Q2, the company's total order book stood at well over 6,200 crore.
All right, Vivek, thank you so much for that. In fact, on that note, we'll thank our entire team for stopping by and giving us their entire list of stocks that they are tracking this morning. In fact, in case you missed it, let's give you a recap of the same. Stocks with positive news flow. We have HUL, the telecom companies. We have Interglobe Aviation, BHEL, Hitachi Energy, Power Grid and Premier Energies. Stocks with negative news flow are the ones which are supplying paper, Zomato, GE Vernova and KEI Industries. Let's go across to Manisha Gupta now for a quick roundup of all the action from the commodity market overnight. Manisha, some cool off in crude?
Oh, yes, it is. And this is because of the reports of Israel-Hezbollah ceasefire agreement. So, yes, we've seen the strength in US dollar and the ceasefire agreement. Both of these things work in sense of bearishness in case of any of these commodities. Though, of course, in the Asian markets right now, the markets are reacting to US plans to raise tariffs by additional 10% on China, 25% on Mexico and Canada goods as well. So we are stuck somewhere in the middle. But yes, most of these commodities still holding on the lower side of the range. Crude oil prices fell 3% overnight. We also hear that the OPEC and allies meeting on 1st of December is going to be an online meeting, and there could be production cuts in place on 1st of Jan as well. So that means there is not going to be more production coming in from OPEC into the international market. The other area which saw huge profit taking has been the precious metal prices. As the safe haven buying kind of eased, we saw gold prices decline 3.5%, silver fell 4%, platinum 3%, palladium 5%. So, well, yes, there was a complete sell-off in the precious metal markets overnight. And same goes for, in some sense, for the base metal prices also. 0.5% to 1.5% of a cut overnight is what we are seeing in industrial metals too.
All right, so some cool off in the commodity complex today. Thank you, Manisha, for that quick wrap up. We will take a break on that note, come back on the other side, and we'll have Amnish Agarwal of Prabhudas Leather joining in. We'll get a couple of fundamental stock ideas going with him. Also in a bit, we chat with Karthik Narayan of Teenley Services to talk about the employment outlook for the second half of this year. Welcome back. So just taking stock of Asia once again, the markets where there is a threat of higher tariffs are completely shrugging it off. Hong Kong markets up about 0.5%. Even mainland Chinese markets, the Shanghai Composite is trading higher. But other regional markets are down. So just take that on board. Markets like Singapore, Japan, and even Taiwan lower this morning. So mixed picture across Asia. Let's see which way we basically go. In the meantime, let's get a conversation going with the management at TeamLease Services. Now, TeamLease released their employment outlook report for the second half of FY25, according to which 7% workforce growth is expected in the second half of this year. So what will drive this workforce growth, and what are the other trends they're noticing across businesses? Karthik Narayan, CEO at TeamLease, is with us. Karthik, great to have you on. So just give us the highlights. Which are the sectors that could be driving this growth? I think I briefly went through it. And you did mention all the heightened activity in quick commerce, for instance. That could also be contributing positively. So tell us more. Manufacturing, quick commerce, are these the driving forces?
Yeah, hi. So I think, we do this survey twice a year. And, and to give a sense, saying we do this across, 1,300 odd, enterprises across 23 different industries to get a, full view across 20 odd cities. What has come out is, one, like you correctly pointed out, I think the H2 part of, this year, there is expected a 7.1% net employment increase. And if you compare it with last year, same time, it's about 6.3%. So that's a good 12% increase. Now, the important question you ask, which are the drivers, which are getting to it? Again, there are two statistics on this entire thing. If you look at industries which are, the large part of the industries, large part of the companies, a part of a particular industry which is kind of growing, in that sense, it is largely, quick commerce, e-commerce, retail, and automotive. But if you look at sheer number of work which is expanding within a particular company, it's largely coming across in logistics. It's coming in EV and EV infra, and it's coming in agriculture and agrochemicals.
All right, logistics, EV infra, and agriculture, agrochemical. That's very interesting because, one would have thought that maybe some sort of improvement in the IT space, the traditional guys, BFSI, etc., which was underwhelming. And I also read that you are expecting the food processing industry to lead hiring in the second half as well. If you could give us a sense on these traditional industries and the outlook for the second half.
No, so you're right. I think BFSI has been subdued for a while, and that is since November last year across fintech space, that largely led by, I think, some of the strictures by RBI on loans, especially unsecured loans. So that is one aspect of it, and we are expecting it to remain like that. At least for a period of time. I think there is definitely better monsoons this year as compared to what it was earlier. So we're expecting some sort of a rebound in agriculture and agrochemicals, largely around seed, fertilizer companies, etc., and all that. So that's the other aspect that we are expecting it to grow.
Okay, so just to recap, logistics, EV, agrochemicals, quick commerce, these are some of the areas where you're seeing green shoots. Karthik, what does this mean for your business? I mean, as we look at trends going forward, what is your exposure to some of these sectors which are seeing higher workforce addition? Give us some contours of how business is going to be in the second half for you.
Yeah, I think the most important part for us is, as we look at some of this data, is that, India continues to grow. And I think that's the more important part. And therefore, the first half, if you look at the EPFO data, there was a 7% net, employment increase. We are expecting similar numbers, going into next year from an overall, macro perspective. For us, we are net beneficiary when there is, overall formalization of workflows, which continues to happen. What we have seen this year as well is that while there are some sectors which are in stress, for example, FMCG, FMCD due to high input costs, etc., and all that, it is also driving some of these businesses to formalize more. And I think as formalization increases for various reasons, for reasons that they want to eliminate ghost employees, improve their retention, improve productivity, I think we are net beneficiaries in that particular case. So we are expecting positive momentum going into the next second half as well. Because overall, we expect, employment to continue, increasing at a steady pace.
Right. So then what does that mean for your second half outlook? Because your overall staffing and allied services grew about 8% in the first half. And in that, the specialized staffing declined by about 1.5% in the first half. Second half, what kind of guidance can you give us when it comes to this vertical?
So we don't provide, forward guidance, but what I can tell you is I think there is definitely, positive momentum, across all, including, our EBITDA margins. In terms of growth. But, specifically given that you called out IT, I think IT has been, a dampener for a little longer than what we expected it to be. But some sort of an offset which is taking place by growth in GCC businesses. So we're expecting that to kind of help us out in second half.
You mentioned that there should be steady growth. Now, just give us, and this is not a question really for only the next 2 quarters, but going forward, as some of the other businesses also pick up and maybe generalized staffing picks up. I don't know, I mean, is that going to be further margin dilutive? You're at around 1.2% margin, EBITDA margin as of second quarter. So in terms of margin profile, what should we expect over the next couple of quarters?
I think, volume profits is what, we need to really be looking at, from that particular, business in terms of growth. However, having said that, the industry that we occupy is functionally dependent on, the salary increases that some of our employers give our associates. And hence, as a function of that, it's our, margins don't grow at the same pace, right? So I would say steady state as we speak going into second half.
And the mix between generalized staffing and specialized, what is that likely to settle at?
Yeah, again, difficult to kind of put across specifics for the future, at this point in time. So it'd be difficult for me to comment on that.
How far are you when it comes to your M&A activity? Because you did say that, you are actively in discussions. This was about a couple of months ago. Has that moved further? Are we likely to hear anything close out in this quarter or the next?
Yeah, so we are in active discussions, especially in the, what we call the HCM space. So hopefully within the next 6 months, we are expecting, some closure to happen, which is going to be, net profit accretive for us. And
what's the broad size that we're looking at here? Because the net cash that you have, including free cash, stands at around 550, 560 odd crores.
Yeah, so some of those I'm not able to kind of, share straight away as to what is the size we're looking at. But, hopefully you should get to know as we close it out in this, quarter max.
Okay, short point. Will it be any more than the cash that you already have on the books, or will you have to raise funds?
No, not at this point in time. We're not looking at raising funds.
Right. That answers our question. Thank you so much for joining in, giving us a broad outlook on, the way hiring is likely to pan out over the next couple of quarters, at least the second half of this year. Unfortunately, not being led by traditional industries, but agrichem, EVs as well as quick commerce would be the ones that would lead hiring for you. Margins likely to look better in the next half of this year, not too much beyond the current levels that they are at though. Thank you so much for joining in. Let's move on. We have Amnish Agarwal, Head of Research at Prabhudas Lilladher, joining in now on the market setup, his fundamental calls. Amnish, yesterday we did see some pickup in the FMCG pack, and I ask you about your view on the FMCG, particularly for 3 reasons. One, the electoral success of the Ladki Bahini scheme tells you that maybe the populist electorate is back, which means more money in the hands of people, positive for staples. We're also in the third quarter, which is seasonally the strongest, and we did see a decline in oil prices overnight. All of this, does this give you enough confidence to go back and buy FMCG staples, or maybe still take a brief pause?
See, hi Mangalam. Actually, the impact on FMCG is not due to, say, one single factor.
Yes.
Now, if you look at, say, some of these welfare schemes, they were earlier also there. And for example, in Maharashtra also, I think it is there from past few months. It was introduced in Jharkhand a few months back. It is there in MP. So some states are having it already from past many months. And going by that logic, there should not have been any pressure. So that is one. Secondly, as per you can say the corporate commentary of various companies, the pressure has been more in urban areas, and that too, I would say it is not at the bottom end of the society. You can say it is more like lower middle class, which has been impacted more by inflation. The third thing on your edible oil prices, if you look at, say, past 6 to 7 months, edible oil prices have been moving up gradually, whether it is palm or the other edible oil stable. Now, just a correction of 1 day or 2 doesn't mean much. And on top of it, we had seen increase in the import duties by roughly around 20%. So a simple correction of a day or a few days, I think it is not going to change the consumer sentiment significantly. For example, your wheat prices are already at 3,000 rupees per quintal. So I think there is overall some softening when it comes to, say, your fresh vegetable prices and all, which obviously will provide some relief. But as far as your corporate performance is concerned, have we seen the bottom in terms of, say, volume pressure or margins? Maybe yes. But are we in the optimistic phase where people used to be, say, 2 to 3 months back? I think we are still away from that. It's going to be very, very, I would say, stock-specific approach with slightly longer term in viewpoint, because we should not expect the recovery to be absolutely V-shaped. Because this quarter we have seen things going down. Before that, everyone was too gung-ho on the sector. And suddenly in 2 months, I think things are not going to take a completely U-turn.
Sure. Okay, so that's a call on the consumer space. Let's talk about engineering capex and infrastructure as well, because yesterday this part of the market was absolutely lit up, right? After the Maharashtra outlook. But it's not just the Maharashtra sentiment, Amnish, to be fair. Look at just the order flow announcements from yesterday. Cabinet is announcing almost 8,000 crores of fresh orders for railways. Then we had this big HVDC announcement from Hitachi. They're setting up this connector between Gujarat and Maharashtra for evacuating renewable power. There are announcements from Power Grid. They've won some contracts in Rajasthan. So there's a lot of activity on ground as well. Anything you like, anything that you would be willing to buy now in the capex/power/infrastructure space?
Okay, you see, capital goods and engineering, it's a long-term story. Because if you look at the various plans of the government, ranging from, say, increasing your overall renewable power in the country, whether it is energy transition, setting up, you can say, grids, roads, water, sanitation. So everywhere, I think the capex is going to be humongous. Now, what is happening is that in the first 6 months of this year, the capex actually done by the central government, that has gone down because of elections, too much of rains, heat wave earlier, etc. And as we stand today, to meet the annual target of government, we need to grow capex significantly by around 50% on an annual basis for the next 2 quarters. Now, similarly, due to elections at the central level and at the state level, the ordering was also delayed, because due to the election code of conduct, in certain phases, you can't give even the fresh orders sometimes. So I think over the next few months, we will see the big announcements coming as far as your entire infra cap goods space is concerned. And I think this is one space where even now your profit as well as top line growth momentum is there. And in this space in particular, you see companies like ABB, Siemens, they are structurally, you can say, great buys, big companies in terms of technology, in terms of where they are placed to capture this entire transition which is happening on the infrastructure side. But in addition to it, I think we like stocks like L&T is there, then Triveni Turbine is there. Okay, but this entire pack, I think it should do well over the next at least 2 to 3 years.
All right, L&T and Triveni Turbine is something that we'll keep an eye out on. Do you have any particular railway stock that you like? Because all of them have seen a correction of anywhere between 30 to 40% from the highs. At one point, they were overheated. But over the last couple of trading sessions, we've seen them come back. They're backed by some of the order wins that we're getting for a few players as well. And this morning, there is news that the cabinet has given a nod for projects worth nearly 8,000 crores for 3 railway projects. Do you think they warrant a fresh look after this correction?
I just missed the initial part. Which stock you are referring to?
The railway stocks.
Okay, you see, railways also, as I said, the order inflow was very poor for the first few months. And in railways also, the plans of the government are to increase the overall connectivity first and improve the, you can say, do a lot of investments on the technology side. So I think the order momentum in railways is also going to pick up significantly as we go along. And many of these railway stocks, first, they were overheated, as you said, few months back. Particularly many of these, you can say the EPC railway companies, but post that they have corrected to more reasonable levels. But having said that, I would be very selective in buying that, because many of these companies, I think the growth is going to be there. You can easily expect many of these companies to give you 15-20% growth, but I will be very hesitant to go and buy many of these stocks if they are trading at, say, 40-50 times multiple.
Okay. All right. Amnish, thanks very much for that. We do have to take a quick break. Up next, we'll have our technical experts joining in, Mitesh Thakkar as well as Sachidanand Utrekar, to talk about the market's technical setup and a couple of trading ideas for the day.
back. You're watching us here on Bazaar Morning Call. Just keep an eye out on Gift Nifty. At the earlier part of the show, it was indicating a mild positive start. Now that seems to be increasing a little bit. That mild has gotten a little more than just mild. It's a 30-point uptick that one can expect at the open itself. The question is, where do we close? And for that, we have Mitesh Thakkar and Sachidanand Uttekar for a quick technical check on the market. Mitesh, good morning. Yesterday was a good day of trade. Give and take everything. We still ended about 315 points higher. Over 2 days, nearly 900 points on the frontline index. Where do we go from here?
So, good morning. One, I think, the market texture in the short term has changed. Look at the positions of the moving averages, the indicators on the hourly, the 2-hourly charts, etc. I think this looks like a market which will possibly see further, upward thrust. And the idea is that while this still is not a confirmation of a strong uptrend, starting, but this looks like a pullback, which could extend a bit more, albeit with some volatility, because we've already had about nearly 1,000-point kind of a rally in the last 2 days. So buy on declines remains the idea. 24,150 is the first support pivot on an intraday basis. So I think around those levels, if you get the index today, take long position with a 70-80 point kind of a stop. And on the upside, 24,350 is the first pivot, though I suspect 24,500 is where I think the market will at least go. Maybe beyond that, but that's the logical target of 24,500.
Okay, 24,500 would be the next port of call. Got that, Mitesh. Let's come to Sachidanand as well. Good morning to you. And let's talk about the index strategies first. Would you look at going long today?
Well, absolutely, yes. I think the market has already displayed a very strong comeback. And if you look at yesterday's price action itself, the 24,200 support also looks very decent. So I think the immediate hurdle for the index is to reconquer that 50-day exponential moving average resistance, which is placed somewhere close to around 24,410. Once that particular level is surpassed, we may see this particular rally concluding towards 24,800, 900 kind of a zone during this particular week itself. So we are optimistic on the market, and I think every opportunity is on the buying side. So if you look at the trading setup, I think if you see a positive opening today, the Nifty may see some consolidation within this range of 24,220 on the lower side. And we may see a decline towards 24,180, which would be a good buying opportunity. On the lower side, one can keep a stop loss at 24,140 and expect a move towards 24,460 during the day.
Right. Mitesh, what stocks are you backing today?
Good morning, Mangal. I have 3 buys to a sell on the technology pack, LTTS, or Larsen & Toubro Technology Services. That's a buy with a stop below 5,400 for targets of or in vicinity of 5,600. A buy on Shree Cement with a stop below 25,000 for targets of 26,400, and a buy on Indus Tower with a stop at 332 for targets of 348, and then maybe even higher levels can be looked at. And one sell call, that's on MCX. Keep a stop at 6180. Look for targets of 6,000.
All right. Indus Towers, LTTS and Shree Cement are buys, and we have a sell call on MCX. Sachi, your thoughts? Individual stocks?
Mangalam, we are liking the setup of Indigo. There is already a good news flow, and we have recommended this particular trade to our clients as well. If you look at the overall setup, we've already seen a strong base, somewhere close to around 4,200. We've already seen an elevated move, and plus, if you look at the overall structure, this looks like an extended pullback towards 4380. Now, there was a gap which was left. I think this move may fill that particular gap setup. So I think one can still, build aggressive long positions here. 4210 should be the stop loss on the trade. The other stock which we are liking is OFSS. Now, after 7 weeks of consolidation, we have seen a strong breakout move. We expect this particular momentum to extend further towards 12,630. And that's why we are recommending building fresh long positions with a stop loss at 11,820 on a closing basis.
Okay, all right, gentlemen, got that. Thank you very much for the trading setup and the ideas for now. We'll come back to you a little closer to market opening. Right now, let's look at some F&O cues as well. We have Sneha Sheth, derivatives research analyst at Angel One, joining in for exactly that. Sneha, morning. How's the setup looking to you? What are the trades today?
Very good morning. If you look at the market, we have seen a sustainable move yesterday. I believe at present, 400, 500 is the resistance zone. And on the lower side, I believe 23,900, 24,000 is the support. So as in, like, unless and until Nifty is sustaining about 24,000 mark, I think one should be trading or using declines to add longs. And any move, any sustainable move above 24,500 would be very interesting for Nifty. As far as individual counters are concerned, I have a two buy call. First one is on TVS Motors. This counter has been consolidating, has been taking a good support around 200 is simple moving average on the daily chart. I believe we have seen also a decent unwinding in the call options, at the same time writing in put options, which is very interesting. So I believe we may see this counter heading towards 2,600 levels, and the stop loss which can be maintained around 2,380. Apart from this, we are also liking Federal Bank, which has been doing very good since quite some time. I believe the previous resistance zone should be acting as a support. So 205 is the stop loss, and the upside potential for this counter is around 224.
Right, Federal Bank and TVS Motors are the ones where Sneha is likely to go long. We'll keep an eye out on that. For the markets, of course, the broad range is between 24,000 at the lower level to around 24,500 itself. Something that we'll be watching out for. Take a short break, come back. We'll have the pre-opening rates, and also with us will be Karan Durrani of Elara Capital. He'll discuss Zomato's QIP launch and a lot more. Stay with us. Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Couple of minutes in ahead of the pre-opening rate and 16 minutes into opening. The GIFT Nifty is indicating a positive start for open. We'll keep an eye on a bunch of stocks. Most notably, the food delivery, quick commerce sort of stocks are ones will be on our radar. Of course, we've been telling you that Zomato has launched its 8,500 crore rupee QIP. The stock ended higher yesterday. The price, the indicative price, is close to around 7% discount to what it was as yesterday's close. So that's something we'll be watching out for. On the other hand, keep an eye on Swiggy as well, because there is an interesting initiating coverage report that is coming from UBS on Swiggy. They've initiated at buy with a target price of 515. Remember, the issue price for Swiggy was close to around 390 odd rupees itself. They say that it is well positioned for growth at a 35% discount to Zomato. Remember, Zomato versus Swiggy, when the issue was launched, it was offered at a near 55 to 60% discount. So they believe that this discount can narrow all the way up to 35%. In the online food delivery business, Swiggy has been catching up to Zomato on both margin as well as scale. Quick commerce, they have a lot more work to do, even as there are encouraging signs. And these are not my words, these are UBS's words. And they are expecting Swiggy's online food delivery GMV to grow pretty much similar to Zomato, which is in low 20s, with adjusted EBITDA margins reaching 2.8% in FY27. Remember, the company has told us that steady state margins, adjusted EBITDA margins for the food business could be all the way up to 5%. So that's something we'll have to watch out for. The most important thing to track, though, is increasing fundraisers and competition in the quick commerce space. Quick commerce will be the growth and the valuation driver for both Swiggy and Zomato, as it has been for others as well. But just look at, what's happening in the quick commerce space. Swiggy itself raised about 4,500 crore via fresh issue in IPO, looking to open a bunch of dark stores, almost 1,500 with the amount that they've earmarked for that. Zomato has launched its 8,500 crore rupee QIP, saying that there is competition, so they'd rather have some cash on their books more than what they already have. It was just last week that Zepto raised another round of funds, $350 million raised from domestic investors. Both Zomato and Zepto looking to increase their proportion of domestic shareholding. And it was just recently that Amazon announced its quick commerce foray as well. So the battle for space is rising in quick commerce, both from a customer standpoint and an investor standpoint, with the kind of money that they've been using. So we'll just keep an eye out on that. But there is important news at the bottom of your screen.
Yes, absolutely. And we hope that this is nothing serious. The RBI governor has been hospitalized. He is in a hospital in Chennai. We are expecting the RBI to issue a formal statement with more details. But this is what is available right now. One just hopes that this is something, nothing very, very serious. Let's see. We will be hearing more from the central bank in a bit. He's under observation. That is what we know as of now. So our eyes on that. We'll connect with Ritu as well the moment there are any further updates on this important piece of news. But for the time being, let's keep it with the quick commerce space. Mangalam was just telling us about a bunch of views that have come in on the street on stocks like Zomato and, of course, Swiggy as well. Plus, Zomato is out there to raise, about $1 billion. Karan Taurani, Senior Vice President, Research Analyst, Media, Consumer, Discretionary and Internet at Elara Capital is with us. Karan, great to have you on. Thanks for joining in. We know you've been very positive on Zomato. I think in the last note after the Q2 results, your target is about 320, if I'm not mistaken. But the pitch is getting very interesting, right? Because there's a giant that's about to enter, a giant with plenty of money and muscle power, Amazon Quick Commerce. First thoughts, and then we'll come to individual companies, Swiggy, Zomato, the fundraising, all of that. Opening thoughts.
Hi, Survi. Good morning. So if you look at the quick commerce business, it's very different, compared to the food business. There's a very large target addressable market over here. Potentially, if you look at the quick commerce business today, it's only about 3.5% of India's e-commerce market, right? And there are only certain categories which go very well in terms of quick commerce. Majorly that's FMCG, grocery. Then there is, some categories like, gifting. Then there are other categories in terms of, the apparel accessories which are there, the kids category, the games category, everything put together, beauty, personal care as well. So there are certain categories which will go to, quick commerce in a very rapid manner. And that is why, I think there is ample headroom here for more players to coexist. Unlike in the food business, wherein, the smaller fringe players were, kind of bought out and, Zomato, Swiggy became duopoly, and that's how they're controlling more than 90% of the market today. I think quick commerce is going to pan out in a very different manner because we are very small right now, firstly, in terms of the share. Secondly, we haven't even gone to the non-metro markets, right? So in terms of category penetration, in terms of market penetration, there is still headroom for this business to grow by 50% plus for more 5 years, 7 years, even 8-9 years put together.
Karan,
This is how the non-metro situation pans out.
I completely take your point. Karan, allow me to come in over here. I completely take your point on the fact that there's under-penetration. It's such a long way to go, right? Tier 2, Tier 3, the whole opportunity. But my simple question is this. Last time I ordered something on Swiggy, Instamart, or I think maybe it was food delivery. I don't remember what it was. But I clearly remember the platform fee being 10 rupees. And that, in a huge way, was a big turning point. It was an inflection point when these platforms started charging that fee, right? Now, if Amazon tomorrow comes in, slashes platform charges to some 3 rupees or 2 rupees, I mean, there could be major disruption. You can't rule that out, can you?
Yes, of course. I think, there will be disruption. There's no doubt about it. You might even see increased discounting by some of the players. But the good news is that the moat of this business is not about discounting. A customer will not move from one platform to the other just purely basis discount. They would also want the delivery and the good experience within 10 minutes, 15 minutes in terms of lead time. And plus, you have to watch out here in terms of where the stores are located strategically, in terms of dark stores, the locations, the product, the SKU range, everything put together, right? The kind of user experience, the kind of technology, the kind of system that you have on your app in terms of any kind of issues from the customer side. So clearly, it's an end-to-end game. It is not only a purely discounting game. E-commerce was a discounting game 7-8 years back when it took off, but this is not a discounting game. I think people have kind of moved to online now, and now they are really demanding more in terms of online when they want rapid delivery, and they are willing to pay the price for it. So yes, I think some minor discounting can go up, but not in a big manner because that's not the key mode. Secondly, in terms of the larger players like Amazon, I think clearly Zomato strategically is raising money purely for that reason because you have to prepare for a war chest. And I clearly believe that all players will coexist. You can probably see that some kind of growth rates can become lower here and there for other players put together. Some players can kind of gain market share. But because the market growth potential is huge, I think there's opportunity for 3, 4, 5 players to exist in this market, and all of them will grow well for the next 3 to 5 years.
That'll be interesting, 3, 4, 5 players, because most on the street are expecting 2 players to exist with some strong regional players itself. Be that as it may, Karan, like you said, it is a function of not just the discounts, but the assortment availability, the entire overall, edge that every platform has on the other when it comes to execution and the overall experience. Amidst all of this, where do you see your pecking order when it comes to investments? Zomato, do you think, will still continue to lead? Because over the last few months, we've seen Zepto nearly narrow their share when it comes to Zomato in the quick commerce space. and also in some places be market leaders. So on Zomato's Blinkit leadership is something that I want your thoughts on. And secondly, Swiggy as well. What do you think Swiggy should trade at as a sustainable discount to Zomato?
So firstly, I think in terms of the broader quick commerce market, we clearly believe that, Blinkit could sustain their market leadership over the near to medium term. There could be some minor losses of market share, maybe a couple of percentage points whereabouts. But I think the market leadership position will remain with Blinkit, given the kind of SKUs, given the kind of strategic markets that they have, the Delhi NCR market, where they are phenomenally strong, and they are trying to dig deep into the non-Delhi NCR markets as well. So I think there is very low probability that some other player emerges as a market leader. I think the fight is going to be here more with the other players versus the new players which are going to be there. And Blinkit, no matter what, could be able to sustain market share, given the kind of track record we've seen, the SKUs, the execution, everything put together. Now, the second thing is in terms of discount narrowing between, Swiggy, Zomato, which is Swiggy, Instamart versus the Blinkit on the quick commerce side. The big gaps here are clearly take rates and AOV. Right, and AOV is a function clearly in terms of your strategic markets, as I told you, the kind of SKUs you have. The more you move, beyond the FMCG grocery category, AOVs tend to go up, right? So from that standpoint, Swiggy and Instamart need to work a lot more harder in terms of getting AOVs higher. The gap between AOV, between the market leader and the other players is about 25 to 30%. So it's quite a substantial gap. It may take some time, and also it's very tough to execute over there. The second thing is around take rates, right? So if you look at the take rates, I think Blinkit, just like Zomato on the food business side, they've been very proactive in terms of generating ad revenue. So, ad revenue is a function in terms of the customer traffic, in terms of the market share, in terms of orders throughput, which really drives your profitability and your growth as well, and even the take rates for that matter. So I think ad rates, platform fee, these are levers which are there available for the quick commerce business as well. And as you keep going larger, your bargaining power with the brands is going to increase, which means you can even have better take rates versus competitors. So these are clear levers for Blinkit, which will remain. Instamart discount, might converge on all these metrics, but it will take some time for this to happen.
You don't have official coverage, right, on Swiggy, Karan?
We don't have active coverage on Swiggy as of now.
Okay.
All right. And just a final question. Have you penciled in any sort of private labeling coming in for quick commerce? Because some of them have made investments in private labels as well.
Yeah, so I think those are all try and test models. I think those players will also come in. They might even, push discounts to a certain extent. They might try to make inroads, and eventually they might just become acquisition targets by the larger players. So I think the worry is not about fringe players. The worry is about the larger players here. As I told you, because in the food business, you don't have players which could be, kind of bought out. But in the quick commerce business, all these are conglomerates. I mean, Amazon, Flipkart, if they get deep into the quick commerce business, it'll be tough for, buy them and do acquisition. So that's why I think 3, 4, 5 players will coexist in the quick commerce business in the medium to long term.
Right, take that point, Karan. Thank you so much for joining in and giving us your views on the stocks. You believe that Blinkit will still continue its edge despite, the emergence of new players and the others raising funds, etc. as well. This 8,500 crore rupee war chest will only keep them healthier in the fight in the quick commerce place, where you do see about 4 to 5 players exist fairly okay in the next few quarters, at least the next 4 to 5 years, given the sort of penetration that there is, which is at a lower level. And it is, as on cue, 9:10 on the clock. Let's welcome Mitesh once again for his 9:10 calls. Mitesh.
So for 9:10 call, I'll suggest a buy on LTTS for targets of 5,600.
All right, LTTS for 5,600 is Mitesh's call. From Mitesh, we move on to Nimesh. Nimesh, you have been reading all the brokerage notes that have come by this morning, and the standout one is?
Well, Mangalam, today's standout report is on defense names. A big report from JP Morgan. They've initiated coverage on few names. So they have a buy rating on BEL with a target price of 340. They have a initiated buy on HAL as well, Hindustan Aeronautics, with a target price of 51.35. And they have a neutral rating on Mazagon Dock with a target price of 42.48. Now, a decent upside for Mazagon, but a meaningful upside for other two names, which is BEL as well as HAL. Now, why they are bullish on? They believe that the sector represents a long runway of structural as well as value accretive growth on the back of few reasons. One, increasing capex. They estimate $150 billion of capex over the next 5 years versus just $85 billion in the previous 5 years. Second, increasing exports. They see a 46% CAGR over the next 7 years in terms of exports for Indian companies. And also the third reason is a big focus on the domestic manufacturing with high return on capital as well as on high strong cash flows as well. After the recent correction, JP Morgan believes it's a good entry point for new investors to get in, because these companies provide a decent 15 to 17% EPS CAGR as well as an ROE of between 23 to 33% over the next few years. So a big total addressable market is what they're eyeing for. And after the recent correction, a good entry point is what JP Morgan believes. So initiating buy on BEL, HAL and a neutral rating on Mazgaon Dock.
Okay, all right. So looking at defense stocks all over again. Got it. That's an interesting call. Nimesh, will keep that in mind. All the stocks on our radar as well. Thank you very much. Let's now quickly go across to Abhishek. Now, MFIN, which is a regulatory body for MFI institutions, it has tightened norms for lenders to try and check the rising stress in MFI portfolios. Abhishek is joining in. Abhishek, what are the kind of new regulations and the stricter rules that are coming in place?
Well, in May 2024, we did highlight that, NPAs are rising in the MFI sector, as well as the fact that there are over-leveraging concerns as well, with CREDAC having 6 to 7 loans per customer. So now this has caused a spillover with respect to, over-leveraging, and that is why the regulator has tightened some of the norms. So Citi has written a note wherein they say that exposure to MFI lenders to growth with stress rising during the deleveraging phase, that will continue for them. So MFIN has tightened some of the lending norms. MFIN has capped the number of lenders to 3 from 4 earlier, and they have also capped the maximum indebtedness to about rupees 2 lakh per customer. There will be no lending to any borrower who is overdue with more than 60 days of repayment dues, as well as the fact that they seek PAN for at least 50% of the borrowers by FY25. So Citi says that 8 to 10% of AUM, 3 to 4% customers have borrowing from more than 4 lenders, 9% has borrowing from more than 5 lenders, 7% of AUM is exposed to customers with more than rupees 2 lakh of total exposure, and about 4.6% of AUM that is at portfolio at risk of more than 30 days overdue. Back to you.
All right, Abhishek, thanks a lot for that. So these MFI stocks will be in focus on the back of the news and the brokerages that you just spoke about. But we'll go back to Vamakshi to talk about BHEL and Hitachi Energy. Vamakshi.
Well, Mangalam, both of these counters will be in focus today because their consortium has received an award from Power Grid, and in fact this is to design and execute 800 kilowatt, 6,000 megawatt, 1,200 kilometer HVDC terminal stations to transmit renewable energy from Khavda in Gujarat to Nagpur in Maharashtra. Keep in mind that HVDC projects, generally the contract value is very large, and therefore this bodes well for both of these companies. The project is to be executed by 2029, so good revenue visibility out there for BHEL as well as Hitachi Energy.
Absolutely, and it's from the renewable power space. It just tells us in which direction we're all heading. Well, Makshi, thank you so much for that big project between Gujarat and Maharashtra on evacuating renewable power there. Okay, so I think we are set for at least a positive start. I mean, the GIFT Nifty has been indicating a positive start. The pre-open is 120 points higher as well.
While we wait for the pre-open to settle and, the market's just about 15 seconds in opening, the stocks that really stand out are the telecom stocks. After a big beating that we've seen on Vodafone, that stock with some relief is settling about 10% higher on pre-open. And as a result of which, the ancillary beneficiary of that is Indus Towers, which is up around 4% as well. So those are ones that we'll keep an eye out on. We have the opening bell.
Okay, so about 90 points higher is how we've kicked things off. 24,300 is on the radar. But let's see if it will hold or not. The Bank Nifty is very quiet. Mid-cap index up about, again, 0.3%. It's slipping. It's a bit of a slippery start, one would have to say. Anyway, let's quickly count the gainers for what we have right now. It is telecom, like Mangalam pointed out. So even on the Nifty, Bharti Airtel is your top winner, 1.5% up, because the companies will not have to now provide bank guarantees for spectrum that they acquired before 2022. Aside of that, Lever is reacting quite well, 1% higher. Obviously, the ice cream business is a small part of their business, but nonetheless, it is some value unlocking that's coming through. There's ITC that's up and about. BEL is reacting positively, perhaps, to the JP Morgan report that Nimesh just was talking about. ICICI Bank, TCS, these are some of the early stocks which are managing some traction. Reliance is up about 0.3% as well. So now we've settled to a more quiet, more somber 60-point kind of a gain. Let's see what's not working. Some of the economy-facing / PSU names are cooling off after yesterday's big run. So ONGC, NTPC, L&T, Power Grid. These stocks are taking a bit of a breather. SBI is also flat for the time being. Adani Ports is lower. Remember, a lot of the rating agencies, including Fitch, have been raising concerns on some of the Adani Group companies given the developments in the US. That's weighing on some of the stocks, at least as of now. So, not bad. It opened up with a big pop, but now it's settled to a gain of about 65 to 70 points on the Nifty.
Not bad at all. In fact, we're getting some support from the IT pack, so that's good news because yesterday it was slightly shy of supporting the index in an otherwise good day. So Infosys is now moved to the top of the table when it comes to Nifty gainers. ICICI Bank doing extremely well as well. Infosys was one of the lone heavyweights on the index which underperformed in yesterday's trading session. We spoke about the telecom stocks, but just keep an eye out on the FMCG stocks as well. Colgate has opened about 1% higher. ITC is about 0.75% higher as well. So a lot of these FMCG staples doing extremely well. In the broader markets, the stock that Vamakshi spoke about, BHEL and Hitachi Energy joint venture has gotten a letter of intent for a Khavda-Nagpur HVDC project coming in from Power Grid. Look at Hitachi Energy, that's up 6% straight off the bat. Transformers and rectifiers, another stock which is doing extremely well. So a bunch of these infra names continue to do well. Zomato, it was likely to open lower largely because of the big discount to its yesterday's price that was on offer when it came to the indicative price of the QIP, but that seems to have been bought into, and the stock is now about 1% higher, telling you that there is strong demand for the paper that Zomato is giving. And it's not just Zomato, Swiggy too is up around 2.5% on the back of that positive note that has come in from UBS. On the stocks which are seeing some bit of profit taking, we have the likes of Raymond, which after a big move in yesterday's trading session is seeing some bit of profit taking. We are seeing Imami also, after a decent move that we've seen yesterday, seeing some bit of profit taking. Gillette as well was up in double digits yesterday, has opened mildly in the red. Dips, whether they get bought into or not, is something we'll watch out for. And in the financials, we do have REC, which is slightly in the red, Canfin Home slightly in the red, AU Small Finance Bank is the other one that I'm looking at. But by and large, the mid caps are doing a lot better than the big caps. We have nearly two stocks advancing for one stock which is declining, with the mid cap index itself up around 0.2%.
Absolutely. And by the way, Triveni Turbine, remember the stock? Amnish was talking about it. It was one of his picks in the capex space. That stock's opened up really well, 4.5% up on Triveni Turbine. What else? Hyundai Motors is finding some buyers this morning, 2.5% up on Hyundai Motors. The stars, of course, continue to be the telecom stocks, thanks to the relief on the bank guarantees, as well as Hitachi. Hitachi is still up about 7%. HVDC, Renewable Energy Connect, between two states, Gujarat and Maharashtra.
I'm just personally very excited to know what M&M does today, because the stock was doing extremely well yesterday, and then you have the EV launch that comes by today. Yeah. It's slated for the display to public and the pricing, etc. All of that will come by this evening itself. The stock has done extremely well this month. It's up around 12%. This year, it's nearly doubled shareholders' value. But ahead of that launch of a new category and prices, etc., we've seen those ads. The car looks fairly snazzy. Does the actual product live up to its hype or something? Is something we'll watch out for.
With the kind of trust that M&M has built as a brand in the SUV space, can it replicate that and build on that in the EV space? I think that's the biggest question. And a lot of people are waiting to see if the company can transition into being a premium EV player now. Premium SUV/EV player now. So let's see. Interesting one on the radar for sure. Let's take the conversation forward. Market settled with a gain of about 80 points, so not a bad opening at all. We have Ashwini Agarwal, founder and partner at Demeter Advisors with us. Ashwini, great to have you on as always. We're living in very, very interesting times. We wake up to new tariff announcements, new geopolitical news and announcements, and so much more, right? But what do you think? I mean, it's been about 2 months of cooling off. November is now drawing to a close, October, November. Sobering months for the Indian market. What lies ahead? How do you think we'll end the year?
If you think about it, what's happened over the last couple of months, it's been, multiple things that have come together. On the fundamental front, the consumer demand environment has been weak, which has led to a significant earnings miss in aggregate for corporate India. In addition to that, there has been a significant supply of paper, both from the IPO markets as well as from FII. So, purely from a demand supply perspective, the demand from the mutual funds, while it has been robust, has been struggling to cope with the supply. How do I see things going forward? I mean, I think, the narrative right now in the short run appears to be that US remains one of the most interesting places to invest. And that's obviously taking the shine of, markets like India in the short run. I think in the longer run, the economy and the earnings will rebound. My sense is first half was a little bit unusual because, we had a lot of slowdown in government spending. You had truant weather, excessive heat during the summer, followed by excessive rain, and a wedding season getting shifted to the second half of this financial year for some Hindu calendar reasons. I'm not very clear how that works, but that is how I'm told it is. And I see some demand rebound happening in H2, but I think because the starting point of the valuations were high and the earnings disappointment has set in, the market will wait to see an earnings recovery before it takes a big leap upward. We found some sort of support at about 10% below the highs for Nifty, for example. But I think, this is similar to what we saw in September 21 to March 23 period, or more specifically September 21 to June 22 period, where we may hang around here with plus minus 5% on the Nifty for some time.
All right, earnings looking to rebound should come as a bit of a relief, but what comes as a bigger relief, and our ticker team will just speak about that. Moments ago we did get that flash that the RBI Governor Shaktikanta Das has been admitted to Chennai's Apollo Hospital. Now we have the RBI official statement in saying that he did experience some acidity and was admitted to the hospital for observation. He's doing absolutely fine and will be discharged in the next 2 to 3 hours. So that is some relief coming in on, there were fears when the news did come by. So this is fairly good news, and we wish the RBI Governor very, very good health as well. But let's come back to the market. As we were speaking, the Nifty's piled on some of the gains. It was up around 70 points. Now it's about 100 points on the up move, with decent traction seen on names like BEL and further pickup in the IT pack as well. LTTS was one of Mitesh's picks on the long side today, and that stock too is continuing to do well. LTI, Mindtree, Tech Mahindra, Infosys, all of them also picking some pace. Ashwini, I remember you saying that some sort of correction was expected. The correction has come by. You did like a couple of tobacco names in the past as well. We've been talking about the FMCG staple space. How are you positioned on the market right now? With this decline, did you add on to some of the names?
So Mangalam, yes, I did put some cash to work, but my approach has been very bottom up, and that's how at least I'm looking at things. So I'm looking for companies where I see high visibility of earnings over the next 2 to 3 years and reasonable entry point on valuations. By reasonable, it's very subjective, so it depends on the sector and the industry. But I'm definitely looking for earnings growth. So I continue to find earnings growth on a bottom-up basis in pharmaceuticals and some auto components and some chemical companies, in financial services selectively. Though I think the MFI space will continue to provide headwinds to the overall banking and financial services space. So we'll see how that pans out. So those are some of the areas that I'm looking at. Some textiles exporters, for example, are talking about very robust order book indications from their customers in the US. So exporters as a basket, especially US-oriented exporters, should do very well. So, those are some of the areas where one can look for ideas, and that's what I've been doing.
So exporters as a basket, could you get a little more specific when it comes to, the categories here? Because you did speak about pharmaceutical, you spoke about textile, but there are a lot of infra names as well which are looking to export to the US. Are you in the camp of any of those?
Yeah, you could. I mean, there are companies. So I don't want to take any individual names for obvious reasons, but there are companies that are exporting. And if exports is a substantial part of the revenue, then you will see tailwinds. And there again, last couple of quarters, you saw significant delays to shipping because of the Red Sea crisis and higher shipping rates. And some of that has started to normalize. And the working capital cycle has also normalized. So that benefit will also feed through. So yes, I would say if the exports is a significant number, or as a percentage of the total revenue, then it makes sense. But in infra, the only caveat I would have is that most infra companies in India have a significant government exposure, and valuations are not easy to digest. So, for an investor like me, those don't work. But yeah, that's an area you could look at if you can address the concerns around valuations, exposure to government, etc.
Speaking of exposure to government, what about government itself? I mean, the companies that are run by it. There's a debate out there, Ashwini, whether some PSU stocks, maybe defense or railways, whether they deserve a bit of a relook. Now that prices have cooled off 25 to 50% in some cases. JP Morgan today put out a note, for instance. They're rallying behind stocks like, Hindustan Aeronautics, BEL, and a bunch of others. What's your view?
Okay, so great question, Survi. Thank you for giving me that cue. What I really like in the PSU space are the PSU banks. I think the PSU banks will do reasonably well over the next couple of years at least, because they will continue to experience very muted credit costs because, they've been late to the cycle of the cleaning up. So the recovery cycle for them will continue to feed through to lower credit costs over the next couple of years. Also, what you're seeing with them is that as government expenditure increases and some of the new investments in India come through, you'll probably see an improvement in the loan growth as well. And on the deposits front, they're very well placed, and valuations are still quite reasonable. So that's one space that I like. And you're right, in some cases, in the defense or electronics manufacturing areas, stock prices have taken a huge beating, and now they might be approaching, some sensible valuations. I haven't, dabbled in that area yet, but yes, it does look interesting. You're right.
All right. What about, the non-PSU infra names? The street believes that post Maharashtra elections, there would be a fresh impetus to capex once again. We've seen a couple of these decisions that came by overnight. The cabinet has approved close to around 8,000 crore worth projects in the railway space itself. So what do you think of the rail stocks and some of the other infra names?
So, Mangalam, like I mentioned, I'm very sensitive to entry price and entry valuations. So, if the valuations at the upfront are expensive, then I don't want to go in there, because then what happens is you need everything to go right for you to make money, because otherwise you have an earnings miss and a PE derating, and it's a very powerful combination. Unfortunately, for a lot of the infrastructure names in the area that you mentioned, in railways in particular, starting point valuations continue to be quite expensive for my taste. So that's one challenge. The other one is that while that problem has historically not been there for rail, domestic infrastructure companies have significant exposure to government, and government payments and government disputes, in the past have derailed many such stocks. So, I continue to be a little bit wary. Yes, there might be opportunities out there. I'm not denying it. But, the way I think about it is that there are other areas where I can find better risk-adjusted returns. So why bother?
Ashwini, we haven't touched upon the mind and the might of the consumer at all so far. And I think this remains one of the most interesting aspects in the market today, right? Whether there is a slowdown, not slowdown, is rural better, is metro, urban consumption slowing down? And then the channels themselves, there's just too much going on. Yes. Do you like anything over here, whether the platform companies or the traditional retailers or the guys who are making all the products, FMCG? What are your thoughts on consumption, and what part of it would you play, if at all?
Okay, great question again. So I think, the debate is really whether the slowdown is structural or cyclical. My view at this point in time is that it is a little bit of cyclical more than structural. And therefore, I'm hoping to see some recovery or rebound in the second half. Now, whether it is rear-ended or it is front-ended, I don't know. Coming to which areas that I'm looking at, I'm typically focusing on the top end of the consumption pyramid. I think that's where the sweet spot is, and that continues to be where I tend to focus on. So, there are several players out there. There are people who retail, expensive products, whether it is watches, or it is saris, or it is cars, or so on and so forth. So, some of those things could be interesting if you can convince yourself that there is a moat around the business. And that's a very key thing, because like you mentioned, there's a lot of disruption taking place in retail. And if your business, if you're looking at a business that is prone to a disruption, or is or can or may not exist 5 years down the line, then you have to be careful about what you pay. So that's one area that I'm looking at. The other one I would talk about is real estate. In my mind, real estate cycles tend to be very long ones, typically lasting between 5 to 8 years on the upside and 10 years on the downside. That's at least been the experience for the last 3 decades. And we are relatively early into the real estate cycle. So I think, real estate stocks may continue to do well. Yes, they've had a massive run, and, we are seeing some slowdown of demand, but I don't expect that real estate will let up anytime soon. That's my personal view.
Ashwini, thank you very much for joining in. Just yesterday, we had one guest giving us this data point that in 2000, 87% of the household money was spent on essentials. That number came down to 79% in 2022, and it's expected to further decline to 61% by 2030, just basically indicating that discretionary spending has picked up in a big way. But thank you very much for joining in. Now let's turn our attention to the auto financiers, which have been under stress for most of them. In fact, the AUM growth, disbursements, net interest margins have witnessed a decline. So is the pain cropping up? Until when will the slowdown last for auto financiers? To discuss this and the way forward, Umesh Revankar, Executive Vice Chairman at Shriram Finance, is with us on the show now. Thank you very much, sir, for joining in. First, if you could talk about, have you seen a slowdown at your end? And what is the outlook now for the second half of the year in terms of AUMs, disbursements and growth?
Yeah, good morning. We have not really seen any slowdown in the credit demand. The credit demand has been steady for us, and I feel even the festive demand was quite good across the urban and rural. So two-wheeler or tractor or even passenger car demand has been reasonably good. So we feel that we'll continue with what we have done in the first half of the year, that is around 17 to 18% growth. Minimum of that is possible because the second half looks a little more better in the rural, because rural there has been some buoyancy with the crop being output being higher, agri output being higher, and MSP definitely has helped.
Right. We've spoken to a bunch of credit rating companies, etc. as well, and a lot of the other auto financiers who did say that there was some pressure on disbursements and they did see a decline in their AUM growth rate. But maybe that has to do a lot with fresh cars as against used CVs. So I just wanted to understand a couple of things from you. How have the prices in used CVs trended over the last couple of months? How are they expected to move going forward? Because a large part of your AUM growth has also come in from the price increase as against, just volumes.
Yeah, the price increase over the last year, if you see, it has been quite good. See, over the 3 years, if you look at prices on an average has increased by 30-35%. That has really helped us in our volume growth. But at the same time, the further increase in price in last 6 months has not happened. That means the inflation and the technology upgradation that actually increase the price, it will no more help going forward in the next year. Next year, the numbers have to go up. So I believe that there will be good demand as the government spend increases. Because right now, in the last 6 months, one thing that has been a little muted is the government spent on the infrastructure. Once that happens, there will be a much bigger movement of goods.
So this 17 to 18% growth that you foresee in the second half, how much of that would be price-led? How much of that would be volume-led?
It will be mostly price-led. This advantage will be there for this full year for us.
Okay. So Mr. Revankar, we've discussed growth. I want to spend a couple of minutes now understanding what your view is on the whole worry surrounding potential asset quality issues building up. Right now, it's an MFI. We've seen what MFIN is doing. They're talking about, making lending norms more prudent, and it's great to hear that. They're looking at limiting the number of lenders a borrower can have or the number of loans one can have. Now, while, of course, CV is a big part for you, you do have exposure to the MSME space, to personal loans. Incrementally, do you see any sign of distress, any delay in payments building up? So far, till the second quarter, your asset quality has been absolutely pristine.
I don't see any kind of deterioration in the MSME lending. It has been doing well. And all our MSME lending, most of them are against the collateral. So we don't really see that kind of a situation. But personal loan, our portfolio is very small. We have not seen any kind of deterioration there because we lend to our existing customer only who have repaid. That means I don't have the customer has a track record with us, and they're not new to us. So to that extent, we are safeguarded on personal loan. But overall, if you see, wherever there is an inflationary tendency, the personal loan over the period get deteriorated because people borrow more for consumption, and that will get into a challenge if further borrowing becomes a challenge. So that's a natural, wherever there is an inflationary tendency, that a personal consumption loan can get into problem if the further getting loan becomes difficult. So that is a situation probably there in certain markets, but not exactly in all market. In few geographical location, only we see this tendency.
No, the worry, sir, was that, if someone... borrowers are spread across different institutions, right? And even if there's an MFI borrower or a rural borrower who's taken multiple loans, maybe personal loans, maybe even an MFI loan, and also a CV loan from you for a two-wheeler, etc., and whether it's a domino chain, whether it starts impacting the system across the board. So you're saying no such issues. So just some guidance on credit costs, on asset quality. I mean, as of the second quarter, you were at about 5.32 gross NPA. How do you expect to close the year, credit costs and asset quality?
And let me make it very clear that people who take loan from the microfinance are never the customer with us, because person who takes loan on asset, buying a two-wheeler or a vehicle loan, he will never have additional loan from a microfinance company. That's not the case because they are two different set of customers. However, I should say, we are confident of improving on our credit cost. Already our credit cost is around 1.87, and we are quite confident that we will be able to maintain it below 2 throughout the year.
Okay. So you are, hopeful to maintain your credit costs below that. You've been also slowing down, sir, on gold loans. How do you, and even personal loans, how do you expect the growth rate for gold loans and personal loans to pan out from here?
Now, we are very confident that gold loan will grow in our book because we are making more branches to do the gold loan, because we need to build a branch with some kind of a safety standards for making the gold loan. So we are actually adding more number of branches to gold loan. So therefore, we are confident of increasing our gold loan portfolio. Same may not be the case with the personal loan because since we lend to only our existing customer, it may not really grow. Last year it grew because it was from a low base, but this year onwards it may not really grow in a big way.
Right.
So is there any guidance that you can give on gold loans at least? You're saying it's going to grow. Are we looking at low single digits, high single digits?
No, it will be definitely double-digit growth.
Double-digit growth.
All right, double-digit growth. Just a two-part question. One, since you lend only to your existing customers itself, I wonder if you've done any analysis on how the indebtedness of your customers has changed over the last couple of quarters. Are they more leveraged now versus earlier, or the level is the same? Just that is one. And secondly, going forward, what are the kind of margins that you would make on the loans that you would give? Because you've been doing well as against everyone else in the industry. What is it that you do differently?
See, basically, when we look at credit bureau, credit bureau reporting, we do see some of our customer having gold loan outside beyond Shriram. Otherwise, we don't see them borrowing from any microfinance company. Definitely not the vehicle customer, whether it's a two-wheeler or the commercial vehicle owners. So the indebtedness is limited to gold loan, which is a short period loan, and which definitely get repaid within 3 months to 6 months. And the multiple loans which we try to factor in the first-time borrower, that probably would have borrowed from the informal sector, which we may not get reported, but that we try to do with a credit check by visiting their home and see whether he has borrowed from any other source. And normally we make it doubly sure that he doesn't have any other loan outside, and then we lend. So generally, we are very clear that customer is has not taken any other loan before taking a loan from us.
So finally, okay, so your point on asset quality, checking the sort of, the health of the borrower, all very well taken. Finally, two big numbers, FY25, AUM growth expectations and margins, net interest margins. Where do you think you'll hold them?
The growth would be around 17-18% AUM growth. And margin, we would be able to retain at a particular level. We're trying to be at the present level, which is around 8.79. And we should be able to hold it for the full financial year.
All right, take that point. Thank you so much for joining in and giving us the outlook on the year going ahead. That is Shriram Finance, not as perturbed as some of its other peers in the vehicle financing and overall, business lending space itself. And that explains why, the stock has also moved higher as the management sees no near-term concerns, maintained their AUM growth guidance as well as their credit cost improvement, along with NIMs being at around that 8.8% mark itself. The stock, after being among the top Nifty gainers yesterday, has now moved higher, up around 1.5% post the management commentary as well. Let's move on and let's talk about Krishna Institute of Medical Sciences now. The stock has seen a good year with a near 50% surge in their stock price, but the management plans to add about 1,800 beds in the next 2 years. How's the business momentum shaping up? What's the outlook for the second half? R. Bhaskar Rao, who's Chairman and Managing Director at KIMS, joins us now. Thanks a lot, Mr. Bhaskar Rao, for joining in. The second quarter, we did see occupancy come down as a proportion, but that's largely because the base increased as well. The third quarter, seasonally weak for the hospital industry. In light of that, what kind of occupancies should we expect in Q3 and Q4? And what is the expected, average revenue per occupied bed here?
So actually, whatever we have done in the quarter two, even though quarter three is a weak, but we are still expecting the same growth because of the new facilities that we are adding. And we are confident the RPOPs also will definitely better than the existing because of the highly complicated cases which we are taking in a quaternary care. Definitely that will be able to help. Even though as you mentioned, the occupancy is not a number that ALOS, if operational efficiency improves, the average length of stay will come down. That will be able to improve the available of beds for more patients.
So would you like to put some numbers, sir, on the occupancy? The occupancy rate as of Q2 was 49.7. What could it average in the second half of the year, Q3 and Q4? And even the average revenue per occupied bed, which has been on an uptrend, currently stands at 38,200, 250, 260 thereabout. Can we hit 40,000 very soon?
So the important thing here is the occupancy will definitely, if you're able to take the existing beds, it may increase a little bit. But if you take the consolidated where we have put this QNRI and Nasik is operationalized, and if you take on the whole, it may be same or maybe a little less. So as on today, existing beds, definitely there will be an improvement, both the quarters in the moving forward. That's what we are expecting, even though it is a lean period. And the average revenue per operating bed also will increase to 30, maybe 40 we can able to touch.
All right. Some of the things that keep you stronger than some of the other players is your oncology and renal business which is the specialization. So as a proportion of your overall sales, how much will that continue to grow at going forward in the next couple of quarters and as new facilities come on board?
See, basically what happened from day one when we started from the inception, we have been concentrating on 6 specialties. That is the cardiac sciences and the renal sciences, gastro sciences and orthopedics and neurosciences. Then initially the oncology was not there. Out of all these 5 things, and then what happened, all those things are equally growing. Whatever is the percentage that was going, nearly cardiac sciences were around 20%, neuro was around 10%, gastro was around 5-6%, and the renal was also 80%. Later on, when the diseases is increasing and the aging is increasing, we added oncology. As of now, we have in 2 units only oncology is running. There is in another 14 units we are going to add the oncology facilities. And the beginning, it was not, the women and child was not there. That also added about 3-4 years back. Women and child is also in multi-specialties is picking up. The growth from women and child and oncology will be much more than when compared to the other. But in spite of growing these 2 things, the dilution will not come into the other specialties. They also keep growing in the same pace. These are all the 5-7 branches where we are being very, very confident that these will continuously to grow. Wherever we go and we are opening up the new branches in other areas, and definitely we are focusing all these areas.
Just a word on the ARPOBs, you said they will touch 40,000 by when?
Maybe in the couple of quarters. See, this is not a predicted one. It all depends upon how the complicated cases that comes and moving forward. Now we are being more caring of the quaternary care. I am very confident because the oncology is going to take up in a big way in the next 2-3 quarters. And women and child also we are adding in few branches that also will take up. That's why the growth will come from there. The ARPOBs will increase.
Sir, you are commencing 2 hospitals in Kerala in the current quarter. And then in Q4, you'll operationalize beds in Thane and the Bengaluru hospital. So there will be an increase in the overhead costs. Will you be able to maintain margins at 27 to 28%?
See, as of now, all of them have been boarded, most of them. And in spite, maybe a little more we can able to add. I think we should able to maintain the margins.
Just a final question before we let you go, sir. And this is not on Kim's, but this is on another holding that you have, which is on the bourses. It's called Somnath Finance Corporation, where you hold about 64% stake. The company, announced a rights issue with their second quarter results as well. I wanted your thoughts on what the plan for this business is going ahead. And this is at a time when a lot of these NBFCs or microfinance institutions are facing some sort of stress. So do you have an outlook on that?
See, basically the Somnath Finance, what we have been, even before also we have been commented that one of my relative wants to start because he basically needs funding where to be able to help them. But that I may not be a very totally involved in that, and we have been put the right professionals there. They will grow on its own slowly. And also sometimes it may also if there is a requirement for the subsidiaries required funding, that also some bill discounting and other things may also help. But there is nothing to do with me full time I can able to spend on that.
All right.
It's just like an investment.
All right. We take
I know it is according to you, it is a stressed sector, but still the young people will be able to grow slowly. The stress will come. I always believe if you're able to understand the sector better and if you are not able to overstretch and you understand what is the NPAs and other things, as I was seeing in the before also. Right. And I don't think any business will have any problems. When most of the times we cannot able to say a sector is good, provided if you're able to do not be too greedy or should not expand too fast. That is the way we will be. Yeah.
take that point. Thank you so much, sir, for giving us an outlook on your own business and your personal investment, which happens to be on the listed space itself. We wish you good luck for the next couple of quarters and also the expansion that you've embarked upon with a higher share of revenue coming in from women and child going forward. We take a short break. On the other side, we do have Krishnamurthy Subramaniam of Afcons Infrastructure joining in to discuss infra projects, whether they will see any pickup post Maharashtra elections and their second quarter numbers.
Welcome back. Well, we are putting the spotlight on the infrastructure space all over again. Now, the BJP-led Mahayuti win in Maharashtra is expected to provide a big boost, a fillip to infrastructure in the state itself. And of course, perhaps it will have a sway on the way policy evolves and more orders are given out even at the center level. So what would this mean for a lot of the companies in the sector? How is the second half looking like? To address all of these questions and issues, we have with us Krishnamurthy Subramaniam, Executive Chairman and Executive Vice Chairman, and Ramesh Jha, CFO at Afcons Infrastructure. Gentlemen, great to have you on. Thank you so much for joining in. And there's so much to talk about in terms of your own business in particular and what Maharashtra really means, what this win means for the hopes of infrastructure in the state. So, Mr. Subramaniam, if I could start with you, your total order book, including the L1, I think is running into over 40,000 crores, 43, 44, if I remember correctly. What is your exposure, the exposure to Maharashtra as a percentage of the order book?
Maharashtra would be around 20,000 crores in this.
Okay. So when you talk about infrastructure-related policies, what would your ask be? What would you like to see here? And which are the major projects, if any, that perhaps went into a bit of a cold storage because the state went into election mode? How's the pipeline looking like in terms of big projects in Maharashtra?
The pipeline is pretty good. There was a small lull because of the elections, but now there will be continuous award of contracts with Mahayuti going to be in place. So it's going to be a very comfortable situation.
And which are these major projects? If you could tell us a little bit, some more color on which are the marquee, Maharashtra projects that would interest perhaps you, that in general would be big projects for the state and the country, the upcoming ones.
We had a couple of water supply projects for Bombay Municipal Corporation and two major road projects from MSRDC. And a couple of, road and bridge projects for MMRDA. These are the marquee projects, and some more projects are expected to be bid subsequently. And that's how it's.
Jha, what would be the size of these projects that are upcoming in Maharashtra that you would be interested in? Could you put a number to that? And even the overall pipeline. Yeah, go ahead.
Sorry. Most of the projects we bid are 1,500 crores plus. That's the range in which we operate. So that's the size.
No, sir, in terms of
okay, so each project is about 1,500, but on a consolidated basis, say in the second half of the year, what would be the overall size of projects that are coming up for bidding, which you are interested in Maharashtra and even on an overall basis?
See, up to September itself, including L1, 19,000 crores order booking has been done by Afcons. So another 5,000 crores we are targeting in the balance period. So here we are expected to do around 25,000 crores as against our guidance of 20,000 crores for the year.
Okay. Now, I think, let me come to Mr. Jha as well. Mr. Jha, I think the number that we were also trying to get at was from a total opportunity perspective, for Afcons, for all infrastructure companies. What is that big number, if you have a rough number, which could be the Maharashtra infrastructure opportunity, projects that are going to come up for bidding, say, over the next 12 to 18 months. So would you have a rough estimate?
In Maharashtra, last 1 year or so, they have already done bidding in the range of, say, 60 to 70,000 crores. And that's where our Executive Vice Chairman was talking about that we have already backed close to, say, 8 to 10,000 crores, where we have already received the order or we are L1. And some of the projects, the bids were not opened. So going forward, we expect those bids to get opened. And the state government is quite bullish on building the infrastructure. So, and with a stable government, I think we don't have any number per se from the Maharashtra because they have already awarded sizable amount. But if we talk about a medium term, the company is looking at, we have got a total addressable market of say around 3.2 lakh crores. Including Maharashtra, India, and overseas market where we are interested. So that's a very sizable market we are looking at. And if we talk about Indian market per se, in India, the central government and state governments put together, they have talked about some 11 lakh crore project. And the markets where we are interested, like neighboring countries, there are a lot of projects upcoming. In Middle Eastern market, where we are interested in Saudi Arabia and some of the select projects, that market is also going to grow at a much larger pace than some of the other markets. We are also looking at projects in Africa. We are looking at projects in Eastern European countries. So those are the markets where we are interested, and we are looking at a very, very sizable market.
Right. Just to further that point, you said typically there are 70 to 80,000 crore worth bids that annually take place in Maharashtra. Of that, how much have you been winning in terms of market share, if you could give us a sense?
No, you want to answer?
So, see, what we have already received, we have received close to 8 to 9,000 crores worth of order in Maharashtra already we have received. And I don't think, on an annual basis, the state government is going to incur 60 to 70,000 crore of project. So these are long gestation projects, and they would also like to see how the execution and projects are progressing. And then they will look at some new projects upcoming. So we have already got of that 70,000 crores of they have awarded, we have already received in the range of 8 to 10,000 crores.
Okay, let's talk about some company-specific details as well. The opportunity size is massive, like you mentioned, right? India and some of the overseas markets put together. But I think the street wants to see more execution as well. You've already guided for FY25 to be slightly sluggish. So just run us through the pace of execution as well. Can we expect at least H2 to be a little better than H1? Or will this be a completely flat year in terms of revenue? And then what do we expect in FY26 and onwards?
This year is expected to be a flat year. There could be a marginal improvement in FY25. FY26, we expect a 20 to 25% growth with a probability towards the higher end of the spectrum.
Okay, so historical growth rate has been about 15% for you, but you're saying in FY26, growth would be higher at 20-25%. And what about margins in H2 and next year? Can you do margins of 15% plus?
We have been giving a guidance of 11% plus EBITDA. And that's
Sorry,
has
11%.
been our guidance. Yeah, although we have achieved more, but our guidance is 11% plus.
So just a word on metro, because you do a lot of metro work, right? Underground as well as elevated. And I did notice a lot of that has happened for the Delhi metro. I don't know how active you've been with the Mumbai metro, and whether the metro in the city and in other parts of the state, whether that is going to be a big opportunity for you. Just kind of give us some color on the breakup as well. I remember last time when we spoke, you mentioned, for instance, marine and hydro, underwater, these are the higher margin contracts for you. So as you look at the bidding intensity going forward, between marine, metro, roads, what are the kind of projects that you will chase more aggressively?
Metro projects will continue to be a priority for us, particularly underground metro, where the margins are expected to be better and where the technology plays a key component. And Maharashtra, we are only working on few metro projects because of our overexposure to metro projects in other parts of the country. But in future, whenever the other phases of metro comes in Maharashtra, we would very actively participate in that.
Right. Final question then on your net working capital days. You said that you sustained between 60 to 70 days. They were 63 when we last spoke. And your domestic export ratio, which has historically been 70 to 30, this time around exports came down to 26. Where do both these numbers settle going forward?
See, usually the net working capital in the Q1 and Q2 remains at an elevated level. And these are numbers which needs to be looked at on annual basis only. So at the moment, these are still at the elevated level, despite the order mix undergoing change, domestic and overseas. But our project selection plays a very key role. So at the year end, the kind of guidance we have given will be landing in those ranges only. on the net working capital side.
And Ramesh, just a final, some tentative guidance also on the order book. Right now, you are at, I think, around 34,000 crores. If I exclude the L1, how are you likely to end the year? And Sir was talking about, more interest in metro projects. I don't know, is there anything coming up for bidding in Maharashtra, metro?
So in Maharashtra, at the moment, we are not looking at any metro in the near term, but we'll have to see how it pans out. But as far as order book is concerned, you have rightly said September ending, we were around 34,152 crores. Subsequent to that period, we have backed a couple of projects, LOI has been received. With those orders, we are somewhere around 38,000 crore, to be very precise, 37,900 crores. And we are L1 at the moment in 7,400 crores. So we are somewhere around, if we include L1, we are somewhere around 45,000 crore. And as we expect, we will close the year with a confirmed order booking of somewhere around 40,000 crore, 42,000 crores.
To be executed over how many years? Is that a 2-year execution cycle, 3 years? It covers you for how long?
Normally, our book to build ratio varies from 2.5 to 3.5. So take an average of 3. So the existing orders would be lasting over a period of 3 years. Of course, there will be fresh orders in the subsequent years, which will be increasing the turnover further.
All right, sir. Thank you. Thank you very much for joining in. Wish you all the very best. And thank you for laying out the picture for us over the next 18 months. Back to the market technicals. Flat, but with a positive bias now on the Nifty and the Sensex. Mitesh is back with us. Mitesh, your thoughts in the first hour and how would you approach trade? What would you do?
Yeah. So I think there was some pullback, but I think, as I said, this choppiness will continue. 24,350 is the pivot on the spot. And yesterday, the Nifty, had a high of around 24,351. And today also the high was 24,343. So 24,350 is an important level. Till then, I think it will do a range of 24,150, 350. I think try to buy it at lower levels and try to take profits around 24,320. That's the way we'll approach it. And on the stock side, I have a buy on Granules with a stop just below levels of 574 for targets of 610. And City Union Bank, I think, it's given a good pullback and now is again looking up. So buy here with a stop at 174 for targets of 182.
Okay. Thank you very much for that. Get into a break. On the other side, Manisha Gupta will be joining in to talk about commodities. Stay tuned.
Welcome back. Well, the equity markets have been holding up. Let's figure out what's happening with the commodities. We've got Manisha Gupta joining in. Manisha, hi again. You were earlier telling us that there's, in general, a bit of a cool-off happening. What's catching your attention right now?
Well, I'm looking at the crude oil prices because $2 shaved off overnight and we're looking at some resistance, some buying on the lower side at this point in time. It was 3% of decline on Monday and this is after 5% of gain in the previous week. It is as volatile as it can get. The strength in US dollar index is yet another thing that's weighing onto the markets. We are back above 107 onto that one. Well, the street is looking at Trump planning to raise tariffs by additional 10% on Chinese goods, 20 to 25% on goods from Mexico and Canada as well. That would mean inflation. That would also mean higher prices. But what would it do to demand is something that the streets really seems to be analyzing at this point in time. Also, reports of Israel and Hezbollah ceasefire agreement have taken the premium off the prices. Markets, though, are keeping an eye on the escalation of war between Ukraine and Russia. Apart from that, Iran also has announced plans to expand nuclear fuel production, and this could bring more sanctions from US on Iran. So that's also a developing story there. The other thing is really about OPEC and allies, which have a meeting on 1st of December. This meeting now has been turned online. They wouldn't be going to Vienna in person there. And the fact is that you could be looking at production increase being postponed yet again in the month of January. This could go on for Feb and March as well. This is yet another thing that's taken some prices off there. Well, apart from that, the Trump transition team could approve export permits for new LNG projects, increase oil drilling. We have seen issues on offshore and onshore because of that. So if that starts to come in as well, that would mean more oil supplies from US. Even at this point in time, at 13 million barrels per day, the US crude production is near record highs. The UBS, in the meanwhile, says that the Brent crude prices will continue to trade within this range. $75 per barrel is an average that they see for the rest of 2024. For the markets, it's going to be a truncated week. Remember, Thursday is a holiday for US. Friday closes early. So most of the action is expected today and tomorrow. And within that as well, it continues to be quite volatile is the expectation.
Right, we take that point, Manisha. The good part is that the OPEC meeting, which usually happens in Vienna, now happens online. So you won't feel that bad not being in Vienna and reporting from the studio itself. But for the market, we've given up some of the gains. So you have the Nifty just about holding in the green. The decliners have mainly been HDFC Bank. So that's the one that, stands out in terms of a downtick. And a lot of these two-wheelers. So the top losers on the index are Bajaj Auto at the low point. We have Eicher Motors, which is at the low point. We also have M&M and Maruti Suzuki. So it's more auto-led on the downside that we're looking at. And a bunch of these pharmaceutical names as well, Ipca and Lupin at the low point. But a bunch of stocks which are doing well belong to the defense space. And Nimesh alerted about those stocks earlier in his standout brokerage report. Let's revisit them. Nimesh, you pointed this out, and the stocks are actually moving out.
Well, yeah, so now all the defense names are buzzing in trade today, largely on the back of a big report from JP Morgan. They've initiated coverage on few names. So they have a buy rating on BEL with a target price of 340. They've initiated a buy on Hindustan Aeronautics as well with a target price of 51.35. And a neutral rating on Mazgaon Dock with a target price there of 40 to 48. Now, for the sector, they believe that the sector represents a very long runway of structural as well as value accretive growth, largely on the back of few reasons. First being increasing capex. They foresee $150 billion of capex over the next 5 years versus $85 billion in the previous 5 years. That's a big trigger. Second being the increasing exports. They see a 46% CAGR over the next 7 years as far as export opportunity is concerned for the Indian companies. And third, a big focus on the domestic manufacturing, high ROCs, as well as strong cash flows. Now, all the stocks have corrected. So after the correction, JP Morgan believes it's a good entry point to get into these incumbents, largely because they provide a 15 to 17% EPS CAGR, as well as an ROE between 23 to 33%. So stocks have corrected, so the good entry point as per JP Morgan, and hence initiating buy on BEL as well as in HAL.
Okay, all right, got that. Nimesh, thanks very much. Those stocks indeed are reacting favorably to some of those comments coming in from JP Morgan. We have to take a quick break right now, but on the other side, it's going to be time for our special segment. It's the economy. Lata today is going to be speaking to a whole host of experts on whether a return of a stable government with a strong majority in Maharashtra will provide a capex boost to the state.